Like getting more money? How about getting more money for doing absolutely nothing at all? Want to know about companies that keep giving their shareholders more money? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. Dividend growth investing is, in my opinion, the best long-term investment strategy out there. It acts like a funnel. That's because it funnels investors right into some of the very best businesses in the world. Well, what is dividend growth investing? It's a strategy that espouses buying and holding shares in world-class enterprises that pay reliable rising dividends. How do reliable rising dividends get funded? Through reliable rising profits. And only truly great businesses can produce the growing profits necessary to fund consistently growing dividends. When you're a dividend growth investor, you basically avoid all of the companies out there that cannot make this happen. By the way, when I say consistently growing dividends, I really mean it. And this video will show you just how consistent all of this is. Today, I want to tell you about 6 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase we have to talk about is the one that was announced by Apple Inc., stock ticker AAPL. Apple just increased their dividend by 4.5%. Yeah, I know, not quite what many of us were expecting from Apple. Apple has become almost mythical in their ability to manage their global supply chain and overcome challenges, but even this company isn't immune to some of the issues out there. Absent unique and short-term problems like continued lockdowns in China, I suspect this dividend increase would have been twice as big. Still, it is more money, and it's hard to complain about that. This is the 11th consecutive year of dividend increases for the tech giant. And let me be clear, I think they're just getting started with that. The 5-year dividend growth rate is 9.2%. And again, I think this most recent dividend increase would have been in that range had the global supply chain not been so disrupted and caused a lack of supply to meet demand. Even with Apple not being able to sell as much product as it otherwise would like to, the payout ratio is still at a very low 15%, which is before even getting into the hundreds of billions of dollars on the balance sheet. Basically, this dividend is bulletproof. Of course, the one bummer here is the yield. At only 0.6%, this is definitely more of a long-term compounder than an income play. Like I've said many times before, this is a must-own stock for serious long-term dividend growth investors. Who is the most serious long-term dividend growth investor in the whole world? Well, I'd argue it's Warren Buffett. And what is the single largest position by far in the $300+ billion common stock portfolio he oversees? Apple, of course. In fact, Buffett has been buying even more Apple in 2022. Meanwhile, Apple itself will be buying up a ton of its own stock. They announced an increase to their buyback program on the order of $90 billion. This is a world beater of a company. Its stock is down 13% year to date, and the company has so much demand, supply cannot keep up. If you're not already invested in Apple alongside Buffett, it'd be a good idea to consider changing that. The second dividend increase I want to have a quick conversation about is the one that came courtesy of Realty Corporation, stock ticker ADC. Realty just increased their dividend by 3.1%. Only 3.1%? Is this another disappointment? Nope. Let me ask you something. What's better than an annual dividend increase? How about 2 dividend increases per year? Yep, Realty tends to increase their dividend twice per year, so look for another dividend increase later this year. The Retail Real Estate Investment Trust has now increased its dividend for 10 consecutive years. Their 5-year dividend growth rate is 6.1%. With a 3.1% dividend increase already in the bag for the year, we're right on schedule here. Indeed, when you look at the dividend on a year-over-year basis, the current dividend is nearly 8% higher than it was 12 months ago. Along with that dividend growth, the stock yields a very appealing 4.2%. That yield, by the way, is 60 basis points higher than its own 5-year average. And it gets better. Agree Realty pays its dividend monthly. The payout ratio is at 80%, which isn't all that high in the REIT space. This is a very nice monthly dividend. This stock has gone nowhere over the last year, despite the business continuing to grow. That combination of business progress and stock regress has created an appealing valuation. Like I just mentioned, the current yield is running well ahead of its recent historical average, so investors buying the stock today are getting compensated with much more yield for their trouble relative to what investors have typically been able to get over the last 5 years. The price to cash flow ratio at 18.0 is quite a bit below its own 5-year average of 21.0. I think this is a very viable REIT in this environment. In fact, I am buying it. Next up, let's have a quick conversation about the dividend increase that came in from Discover Financial Services, stock ticker DFS. Discover just increased their dividend by 20%. That's right, 20%. 20% more money for, drumroll please, sitting on your hands and simply not selling stock you already owned. That is how easy it is for long-term shareholders to get more money. If that's not the easiest job in the world, I don't know what is. The financial services company has now increased its dividend for 12 consecutive years. The 10-year dividend growth rate is 25.1%. This 20% dividend increase isn't that far away from that historical growth rate. But what is really notable here is that this dividend increase comes in earlier than expected, as the company most recently increased their dividend only 3 quarters ago. Gotta love that. The stock yields 2.1%, which is plenty of yield to go along with that huge double-digit dividend growth. And with the payout ratio at only 39%, the company has plenty of leeway for more sizable dividend increases in the future. This stock has held up well, down less than 5% on the year, but I still think it's reasonably valued. There are other names out there that are down way more on the year, but there's no reason why Discover should be down. The company has been doing so well, partially evidenced by this ahead of schedule 20% dividend increase. Oh, and by the way, the company also announced a $4.2 billion buyback program, 13% of the company's entire market cap. The price earnings ratio of 6.7 is super low, but that'll normalize in the quarters ahead. Meantime, the yield of 2.1% is basically right in line with its own 5-year average. The price to book ratio of 2.6 is running slightly ahead of its own 5-year average of 2.4. I wouldn't rush out to put every penny into this stock, but this is a wonderful business that continues to handsomely reward long-term shareholders. If you haven't yet discovered Discover, now's the time to do so. The fourth dividend increase I want to tell you about came courtesy of Johnson & Johnson, stock ticker J&J. Johnson & Johnson just increased their dividend by 6.6%. I've said this before, but Johnson & Johnson could rename their company to Quality and Quality or Consistent and Consistent, because this company exudes quality from every pore and the consistency is legendary. This dividend increase is just another data point proving it. This is the 60th consecutive year of dividend increases for the healthcare conglomerate. Let me continue on the consistency theme. Their 10-year dividend growth rate is 6.4%. This dividend increase came in at 6.6%. Yeah, that's consistent. The stock only yields 2.5%, but one shouldn't expect or demand a super high yield from a blue chip healthcare conglomerate of this caliber. Indeed, the 5-year average yield for the stock is 2.5%. Again, everything is just right in place with this name. The payout ratio is at 44.1% based on midpoint guidance for this fiscal year's adjusted earnings per share. That payout ratio balances retaining earnings for business growth against returning cash to shareholders. When it comes to Johnson & Johnson, I almost always assume it's buyable for long-term dividend growth investors. The day, month, or year doesn't really matter to me. I've been a big fan of Johnson & Johnson since the very first day I started investing in early 2010, and I'm a big fan of it now, 12 years later. In fact, I made it one of my top 5 stock picks for 2022. The stock is up 4% year to date in a market that's down heavily on the year, but Johnson & Johnson is the kind of company you buy with the intention to basically hold for a generation. Most of its basic valuation metrics indicate a valuation that's basically fair. It's a world-class business with 60 consecutive years of dividend increases and a AAA rated balance sheet. This is the kind of company that could be the cornerstone of a portfolio. Don't underestimate it. I now have to tell you about the dividend increase that was announced by Procter Gamble Co, stock ticker PG. Procter & Gamble just increased their dividend by 5%. Here we go again. If there's any company that can wrestle Johnson & Johnson for the consistency trophy, It's this one. This is one of those companies that figuratively makes the world go round. Toothpaste, razors, soap, shampoo, tissue, etc. These are the products that billions of people all over the world use every single day, and that has led to the company being able to consistently grow its profit and dividend for decades. The global consumer products company has now increased its dividend for 66 consecutive years. That's an entire lifetime for some people. I mean, if that doesn't speak on my earlier point about consistency, I'm not sure what will. The 10-year dividend growth rate is 5.2%, so we're right where we should be here. The stock's yield of 2.3% won't knock you dead, but this isn't the kind of stock that anyone buys because of yield or huge growth prospects. Instead, it's just a steady Eddie business that can help you sleep well at night if you own a slice of it. And with the payout ratio at 63.9%, Procter & Gamble is almost a lock for mid-single-digit dividend growth for many years to come. This is a great dividend growth stock, but I don't think it's a great idea right now. All basic valuation metrics are running ahead of the respective recent historical averages. For example, the price to cash flow ratio of 23.6 is quite a bit higher than its own 5-year average of 18.5. This has been a safety play for a lot of market participants who are seeking shelter in the storm. When volatility picks up, people look for something they can count on. But with so many names looking positively cheap right now, Procter & Gamble would not strike me as a priority. That said, if the valuation comes down, it's a classic holding for long-term dividend growth investors. The last dividend increase I want to tell you about came from Parker-Hannifin Corp, stock ticker PH. Parker-Hannifin just increased their dividend by 29.1%. Boom, Parker-Hannifin drops the hammer. When's the last time you got a near 30% pay raise from your day job? Never? Same here. Back when I still had a job, I don't recall ever getting a 30% year-over-year pay raise. And that was even after showing up for 50+ hours per week. As a shareholder, you simply have to hold stock. That's it. It's so easy, even I can do it. The Motion and Control Technologies company has now increased its dividend for 66 consecutive years. Here we go again, yet another company with 60 or more consecutive years of dividend increases. Like I said at the outset of the video, dividend growth investing is all about consistently increasing dividends. This strategy funnels you right into some of the world's best businesses. The company's 10-year dividend growth rate is 10.8%, but there's been a real acceleration in recent dividend growth. This 29.1% dividend increase follows up last year's 17.1% dividend increase, and you even get a market-beating 2% yield to go along with that growth. The payout ratio is at only 38.3%, so the dividend has plenty of room to head higher for many years to come. This stock is down 13% year to date, and the valuation has become more acceptable. This is one of those stocks that seems to always be just a bit too expensive, but the recent correction has put the valuation into a range that I find quite palatable. It's not super cheap, but this is a great business, and the market often assigns it an elevated multiple. The PE ratio is at 19.7 right now. That's actually slightly lower than its own 5-year average of 21.4. A combination of the correction and the giant dividend increases has me more enthusiastic about Parker-Hannifin than I've been in a while. Take a look at this one. Thanks so much for watching. Hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.